Hi and welcome to another video. So we're going to do something a little different today and fun, seeing as I'm bored just trading on my own and I want to share what I'm doing. So I'm not going to do it on the 5-minute time frame, which is my time frame for obvious reasons. I'm not going to get into the specifics of my method, but I will share some setups on the 15-minute time frame, which I've never traded personally myself, but I just want to see how I would do. And I'm going to put it on here on YouTube and share it with you all for posterity. So before we go any further, disclaimer, this video is for educational and entertainment purposes only. It is not intended to be financial advice or a recommendation to buy, sell any financial instrument. You can pause and read the rest, but needless to say, this is not a recommendation to go ahead and jump in with real money. Do your own due diligence and be careful with your money. So that said, here's what I would do. 6A, I look at 6A, 6B and 6C, so the Australian dollar, British pound, Canadian dollar. And this is what I see. We have support and resistance here, going back. I've got this on 10 days, going back 10 days. And here's support and resistance. We broke out of this channel here. Whether you do it this way or you look at it as a diagonal, either way, there's a breakout here. You can see the wicks and then it broke out. So buyers are in control. They're lifting the ask. Price is going up. We broke these highs, so that's another sign that we're going up. And then we did an about face before this high here. And if I use the pen, you'll see that. Oh, there we go again. Hold on. If I use the pen, you will see that there's a V top here and there's another V top here. So price shot up and came back down just as hard. Sellers stepped in, same here, and they missed taking out this high. So that's the first bearish sign. Then we go in here and we see that we have a little micro support and resistance here, and they tried to hold it here via wicks, which also happens to coincide with this support and resistance. That didn't hold. So these two scenarios suggest trapped buyers. They're slowly getting trapped. So what I would do is I would either just stick an order out. Here's the two scenarios. Stick an order out at 20, and that's because 20 is a common number in the Forex futures markets, 20 and 80. So, and it's also one tick above this prior high over here off screen, and put a 15 tick stop, because that's 3 times 5 and I use 5 ticks on the 5 minutes, so logically I would just use a 15 tick stop. And then I would take it off on one of two scenarios. Either it's going to do more than a 1-to-1, so at 20 entry, anything over 605. So you could just stick your target at the whole number, or what I would rather do is wait for a reversal candlestick like this, anywhere at a place where I can get off for a greater than a 1-to-1 risk to reward. That's the first scenario. Or if that doesn't happen, I would just leave it to go towards 80, which I just said 80 and 20 are common numbers in the Forex futures pairs. So there's 80 as a support, there's the measured move as a support, there's the break of these reversal candlesticks to hold this channel as a support, and then finally there is one tick below this low here, which would be, you got 1, 2, 3 moves down, tried to hold, and then it broke down. So it's one tick below that. So there's confluence with 1, 2, 3, 4 reasons there to target that if we got to 20. Otherwise, if that doesn't happen, you can just go ahead and take, if the highs of these two little reversal candlesticks are taken out, 15, and then it closes back down, I would just take the short from there, anywhere that would allow the 15 tick stop to go above this line here. So as low as 01, you could short that with the stop at 16, assuming that that finishes with a red candle, and then aim for the same 80. So you'd be risking 15 to make 21. So that's 6A. That's already taken me 5 minutes, so that's a bit long, but those are the reasons. Maybe I'll skip the reasons for this one, otherwise the video will be too long. This 1, 2, 3 broke up, held as resistance come support, still holding here. Sellers are in control because you got lower highs and lower lows, but if we get closer, you'll see that there's exhaustion volume here. So red, red, red. This green volume is higher than this, suggests upside, because we had exhaustive volume here and here, and then this supersedes this. And so what I would do here is I would buy 470, stick the stop at 45, so a 25 tick stop. Usually I would do an 8, so 24 it should be, but I would put 25. And then aim for a tick above this high where stops would be for the short people who are shorting off of this channel, and I'd put the stop at the buy limit at 30. So you'd be getting, if that worked out, if it comes back down here to 70 and then you get up to 30, that's 60 for 25 risk, reward to risk. Again, if it goes over that 25 in terms of risk and puts a reversal candlestick, then that would be my out, and that's what I mean by dynamic risk management, in terms of aiming for bigger targets but letting the market get you out before, if there's any sign of trouble. So that's 6B, and then finally 6C. This one is a little different. You got this massive chop down from this high here, whichever day this was. This was the 27th of November. Down, 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 down. Big move up. 3-wave correction at highs, but it looks as if it's failing because you had 1 push here, 2, 3, and if you dig into the volume analysis here, you will see that it attempted to go right there and then didn't go. And so I would enter at where is it? Here. The close of that little tiny candle here, and then stick my stop 12 ticks. I believe that's 80. So go long at 80, stop down here at 68, and I would aim for from 80 just to take out the whole number. So 21 ticks for 12 ticks risk. So let's just zoom out, because stops would be up here above the whole number. So just like 1 whole tick above 900, so 901. 80 long, 880 long, 901 target, 12 ticks risk. Same modus operandi in terms of if a reversal candlestick appears before the target, but after a 1 hour gain, you take it off there. So that's my prediction. We'll see how that goes, and I'll be back with the result later on in the week, or whenever they all play out. So that's it for now. Back here then.